11 Bitcoin ETFs are going to begin trading today after the SEC approved their applications. The move overturned a decade of the regulator's opposition to the idea. Not sure what any of this means, though, when, right, Pomp will talk about it, but when they finally say it's okay, maybe, we've talked about it, maybe it's over. Maybe all the people that got in early now say, I'm going to offload it to the sheep that can now get in with the ETFs.
Well, I think in the short term, there are clearly people who've been buying up in the last 3 months on the expectation of this. And the question is, no, longer term, maybe a very different story.
Do the hodlers ever sell? I don't know.
I don't think hodlers ever sell, but I do think this is a historic moment in the sense of it's the first time that the internet and Wall Street, they've had this healthy tension for a couple of years, even a couple of decades. And it's the first time Wall Street blinked, right? Think of it. It's an internet-based asset that now is being arms wrapped around it by Wall Street. And to your point, now that everyone can buy it, financial advisors are saying, okay, ETF regulators are on board. I'm going to go put it in everyone's portfolio. The volatility is going to drastically dampen from here.
But then it could make the move to Andrew's currency that it's never been. The point you don't want to buy a pizza for $25,000. Right. They said there's too much volatility for it to ever be transaction.
Right.
As a store value, maybe it makes sense. But if it has no more volatility, maybe it turns into something.
Well, I think like that. When I say no more volatility is going to dampen. What I mean is over the last 4 years, Bitcoin has had a compound annual growth rate of over 50%. And people are like, oh, that's unsustainable for 4 years. But if you go back over the last 10 years, it's still been 50% compound annual growth rate. And so what I think will happen is it'll just start to taper off a little bit. And in the next 5 years or so, it'll be like 20%, which is still double what the stock market is.
That won't get to Tom Lee's $500,000, though.
Well, but I think what you're asking is a different question. Is it a financial asset? It appears to very much be a financial asset.
Right. Does it become transactional?
Is it a currency?
Yeah.
That's a much higher. Ethereum might be some form of a currency.
That's up a lot more than Bitcoin today.
There are a lot of other, there are probably a lot of, from a technological perspective, a lot better, actually, different technologies in the blockchain for that purpose, if that's what you think this is.
Yeah, there's another interesting thing that's happening, right? So if I go on Wall Street and I ask people, what is your benchmark? They'll tell me the S&P, maybe NASDAQ, right? They have these equity-based benchmarks. If I go ask a 25-year-old or younger, Bitcoin is the benchmark. And so the reason why that's interesting is there's an entire generation of people who say, if I can't beat Bitcoin, then I might as well just buy it. And that's why you see those people, the only thing they're allocating to is Bitcoin or the long tail of crypto assets they're basically speculating on. And so as those people age, now Bitcoin becomes that benchmark. It's going to get into everyone's portfolio. So volatility will dampen down. But ultimately, if you want mass adoption, everyone's got to put it in their portfolio, right? And so the days of the asymmetric 1,000% increases in a single year are probably gone. But an asset that's compounding at 20, 30, 40, 50% a year, you can't get that in the stock market. So I still think it'll be very attractive to a lot of people.
Like that, though? I mean, if it becomes less volatile, if you have everybody able to get into it to do these things, does it still have growth like that?
There's a really interesting mechanism here where we've never had an ETF of a finite asset. Right, every asset is got some degree of increasing or expanding supply. This is a finite asset. And so now all of a sudden you have what could be tens of billions, hundreds of billions, depending on who you ask, that's going to come into this over the next, let's say, 10 years. But there's still only 21 million.
There's gold ETFs, aren't there?
But gold still, the supply is expanding. It might not expand very fast, right?
Same with Bitcoin, though. When's the last Bitcoin going to be mined? 2140?
Yeah, 2140. And then you got to also remember, there's 70% of the Bitcoin that hasn't moved in the last year. And so now we have institutions that are banging on the door. And I think it's important to talk about the fees that have changed as well, right? If you look at Bitwise is now the cheapest Bitcoin fund in America in the sense of it's 0.24% fee, and they just dropped it down to 0.20. That's a 90% difference between where it was a couple of days ago in terms of the publicly available Bitcoin fund.
Why did all of these ETFs say that they were lowering their fees too? Like in the
it's a fee war. Yeah, this is a fee war.
And that's what I mean. Is it going to be profitable for anybody? There's a huge amount of demand that's built up, but there's also a huge amount of players who want to meet that demand.
So if you look, Grayscale was at 2%, they dropped to 1.5%, right? And people are like, why didn't they drop all the way down to 0.2%? Well, the big thing is, if you want to go sell your Grayscale and try to roll somewhere else, you're going to have to pay taxes, unless you're in a tax advantage account. So there's a lot of assets that are going to stay in Grayscale, right? And those guys will never get enough credit for pushing this issue and really kind of helping push it forward. But I think that what you see is Grayscale saying, hey, we already have a lot of assets. Let's hold on to what we have. And everyone else saying, well, we want all the new assets that are going to come in. So we got to go compete in the fee war. And so 0.2, 0.3, 0.4, how much does it really matter? Some advisors really care. Other advisors say, hey, I just want to buy something that's a great product that I think is going to track the price correctly. But what I think is going to ultimately end up occurring is there's going to be tens of billions of dollars that are going to flow into these ETFs. You have a finite asset, so it will go up.
How many of these ETFs do you think will exist in a year or two from now? I think will there be so much consolidation, or some of them just decide I'm not doing this anymore?
I think there will be more 12 months from now in the aggregate number, but there will be a clear 2 to 3 winners, right? And so my guess is that BlackRock will end up being very, very successful. I think Grayscale will hold on to a lot of assets. And then there's kind of this competition among what I'd say all of the like digital or internet-based kind of innovation tech type ETFs that are all going to go fight it out. And so if you have 3 big winners, right, then that ends up being probably tens of billions of dollars.
But Andrew's right. Is that a huge consolidation war?
Yeah, it's basically everyone will keep it because they want it, right? There's a lot of people who have the S&P, index, even though they don't have a lot of assets in it.
It's
do you think long term this is? And I asked this, and we'll show a little bit in the interview, I think later with Brian Armstrong of Coinbase. Do you think this is good for the Robinhoods and Coinbases of the world or not? Because the truth is, if you no longer need to get a Coinbase account because you can buy this through your Fidelity account. Yeah. What does it actually, I mean, look, they're going to make money because they're going to be a custodian on the other side of it, but that's a different business.
So I've invested in Bitcoin. I've invested in a lot of equities across this thing. And this is an interesting day because I'm an investor in 21 shares. I'm an investor in Coinbase. I'm an investor in Bitwise. And so I'm seeing kind of how each one of them is playing this out. And one of the things that's most interesting is the ETF fee war may leak out into custody fee war and also exchange fee war. So Coinbase may have to drop their fees because it may be more inexpensive to hold the Bitcoin ETF for a year than to make one simple trade on Coinbase. So obviously there's pressure there. But also, I think there's a very, very big contingency of people who are educating others about Bitcoin who say buying the ETF is not buying Bitcoin, right? You're buying exposure to Bitcoin, but you're not actually buying the Bitcoin. You're not self-custodying that Bitcoin. And so what we're going to see is how many people care about self-custody versus care about just the exposure to the price.
Coinbase,
I think that will shift.
It can't be good near term. Coinbase's fees.
Coinbase is highly
blows me away whenever I've done anything on Coinbase. Yeah. It's like, wait a minute, it was trading here. Why am I getting it? And I look at it. I mean, what are they, 5% or something?
Here's another really interesting idea from an investment perspective is the public market drastically or misunderstands a lot of these crypto businesses in the sense of Coinbase has their exchange fees. They have their custody fees. They also have a lot of what I'll call crypto native revenue, right? So they have this new blockchain called Base, and they're generating a lot of revenue there. Miners, a lot of their revenue is actually driven by the price of Bitcoin. So if the price of Bitcoin doubles, their revenue doubles because the revenue is denominated in Bitcoin.
But the fee structure itself.
The fee structure it will compress, but they're essentially just shifting it into more of a crypto native revenue stream.
Okay, you're an investor in Coinbase.
Correct.
You said you're looking at all of this. Are you more likely to sell based on this, or do you think you're likely to add to your position?
I think that any company in the public markets that is crypto native revenue is going to do very well over the next 1 to 2 years.
So you're not looking to sell.
I'm definitely not selling.
So you say 1 to 2 years. You think 10 years?
Investing's hard, and predicting 10 years out is nearly impossible, right? What I think is that this is a generational trend where there's an asset class that didn't exist 15 years ago. Now, obviously, it's not going away. And so if you just look at where is money, where is talent flowing, you got to say, okay, crypto is going to be a big beneficiary over the next decade or so. The individual winners, there's always going to be competition, right? There's always going to be newcomers that show up and try to disrupt the incumbents, et cetera. And then you also got to look at like what happens if some of the large legacy players do some consolidation with some of these crypto players. Like if, and again, I'm not saying this is going to happen, but let's say that BlackRock all of a sudden says, let's go buy Coinbase. And we'll give them their distribution, right?
They're toast together. I need to ask you this. So 900 billion, that's a market cap, right? So 70% of the holders will never sell. So how much do these ETF that we talked about, how much Bitcoin do they need to put in? Where are they going to get? I mean, do they need, how many billion do they need to put it in the ETFs? And where are they going to get it from the 70%? Is they going to get it from the 30%, or are the 70% willing to sell at 60,000, 70,000? Where do they get it?
So my prediction is $2 billion in the next 48 hours into the ETFs. It'll smash every ETF record launch that we've ever seen.
That's still small, though, compared to 900 and $50 billion.
Correct. And there's a multiplier effect, right? So $1 in doesn't just mean $1 in the market cap movement, but definitely it's not 900 billion. The second thing is that Grayscale's GBTC, before it had it doesn't have a redemption function. And so if you go back to 2020, there was billions of dollars flowing into that vehicle. And they eventually had about 3.5% of all the circulating supply that went into that fund. And we went from $8,000 to $64,000 in a matter of 6 months. And so what I think people don't remember is that if 70% of that supply is being held illiquid by these holders, they will sell at some point. It's just going to be at a much higher price.
Why would they sell? And I've thought about it. You know, I've got a tiny amount. And if it's going to $500,000, I'll never sell. But I look at it, I'm thinking, wow, it'd be nice to get, 46 is not a bad number.
There's a lot of people who sold Amazon over the years, right? Many other great investments. But I think
we don't know it's an Amazon.
well, it's been better than Amazon.
Yeah, but from here.
from here.
And I think it would take a lot of intestinal fortitude to buy it at 50,000.
Well, again, if you just look at, okay, I have a finite asset, I have a wall of demand that's coming in, right? Billions of dollars at a minimum, probably tens of billions of dollars. And it's a generational asset shift where people are saying, I'm not going to go allocate to these other assets. I'm going to go use this as my benchmark.
Too late, isn't it, Andrew? I mean, you'd be crazy. One Bitcoin for 50 grand when you could have bought it at 5, right?
Well, yeah, you'll feel bad if that's what you're trying to say.
I'm not saying you feel bad. No, I'm just saying you got to really step up at 50. You got to really step up at 50 to get one Bitcoin.
So the ETFs also, another really interesting thing is the unit bias is going to change now. Now all of a sudden, rather than go buy a $50,000 Bitcoin, I may be able to buy a $10 share.
You won't feel like you're buying.
And so there's a very interesting dynamic there that may shift, especially people who are trying to buy that ETF.
All right. That wasn't too much of a victory lap for you, was it? You're humble. You're humble and hungry.
I don't need to say much. I think people realize that, Bitcoin for 15 years was knocking on the door. Look, Cameron and Tyler Winklevoss filed, 10, 12 years ago for this ETF. And there's a ton of people. We'd spend hours if I tried to name everyone who was, had a hand in making this get approved. But it's an ETF on Wall Street now.
Right. Well, that's going to be the last word on it that we're going to have today. For 3 hours.
Good luck to you guys.
Folks. We'll be talking a lot more about it.
We got 12 more guests, Pomp.